The Plug Power Incorporated, Nasdaq Plug, Q3 2017 earnings results were released before opening bell, and the company posted adjusted losses of 4 cents per share on $61.43 million in revenue. Analysts had been expecting losses of 4 cents per share on $54.57 million in sales. In last year's third quarter, Plug Power reported adjusted losses of 9 cents per share on $17.56 million in revenue. Plug Power Q3 2017 earnings. Image credit, Plug Power YouTube video screenshot. Plug Power Q3 2017 earnings. Fuel cell system and related infrastructure sales rose to $45.18 million from $5.65 million in the year-ago quarter. Revenues for services performed on fuel cell systems and infrastructure rose to $5.84 million from $4.76 million last year. Power purchase agreement revenues rose to $5.43 million from $3.86 million last year, while fuel revenues rose to $4.85 million from $2.91 million a year ago. The Plug Power Q3 2017 earnings report revealed a GAAP loss of 18 cents per share versus GAAP losses of 7 cents per share in last year's third quarter. The adjustments for the non-GAAP losses were due to warrant-related charges and cash margins in connection with PPA financing for 4 sites. Bookings amounted to $44 million, bringing the total bookings for the year to almost $160 million so far. Plug Power said it deployed 9 Genki sites, which include 2,753 GenDrive units. That's a more than 200% increase from the previous quarterly record. The company also continued to expand its customer base with 2 large manufacturers in the automotive industry in the US and 1 customer in Europe. Plug Power's PPA deployment financing structure was used to finance 4 PPA sites, and the financing proceeds were more than $3.1 million higher than the equipment cost. Amazon and Walmart made up most of the company's third-quarter order volume. Plug Power upped its guidance. The company said its third-quarter performance was not met without some challenges, which it said will result in downward pressure on full-year guidance. The company expedited its production ramp, but that resulted into higher upfront expenditures. As a result, Plug Power now expects a full-year adjusted gross margin to be about 5% to 6%, which is lower than the previous outlook of 8% to 12%. The company reconfirmed its full-year guidance of $325 million in bookings and revenue guide of $130 million. Following the Plug Power Q3 2017 earnings release, the company's stock tumbled in pre-market trading, falling by as much as 6.86% to $2.85 before the bell.